midst of one of the most significant recovery and resolution cycles. The Insolvency Act is in play, and we are seeing a large number of assets being resolved through that. Now, different entities have different interests in different assets, but one entity which has been very active is Liberty House. They've already bagged two. They're in play for at least two others that we know of. Joining us here for a conversation is Sanjeev Gupta, Chairman of Liberty House. Sanjeev, thanks so much for taking the time to speak with us. I'm going to start with a broader question. You've got two under the belt, Adhunik, I believe, and you've got Amtech as well. You're in the fray for Bhushan Power and Steel, perhaps for ABG. I want to understand your broader strategy first, because these are assets which are, differing in nature, differing in cycles, differing in industries. What's the big picture for you on the Indian story right now?
Yeah, you need to understand the overall GFG strategy fully to understand how these come together. So, I mean, that will take probably too long, but I'll try to summarize. It's essentially aligned businesses, but quite separate. We have in our industrial sector, we have our steel business, which consists of primary steel, with something like Bhushan, for example, and what we call green steel, which is recycled steel, which is the ABG play, because we're trying to, instead of building ships, we're looking to break ships there and to recycle them into steel. So that's the steel cycle. Then we have, of course, our metals business and our downstream auto and defense business. So the Amtech business fits in that downstream auto business. Somewhere in the middle sits alloy steel, which is basically supplying that supply chain for the downstream auto business. So that's sort of the industrial vertical across the chain, as I explained it.
Would it then be fair to say that this still fits into your broader sort of group strategy of being a commodities play, to put it very broadly?
No, I would not at all. I mean, obviously, auto is not a commodity business. It's the furthest you can be from a commodity business. You're talking about platforms which you supply, where we want to be a tier one supplier, perhaps even a single source supplier for larger car manufacturers and vehicle manufacturers, with platforms ranging from 8 to 12 years. So it's far from a commodity business. Commodities go into production of those components. So our commodity business, let's say, sits in the steel business, aluminum business, but the key attribute of our model is that we want to go all the way through the value chain down to the finished consumer products which go into, which are consumed by consumers.
Okay, understood. So the commodity is perhaps at the center of it, and then you're trying to build businesses maybe separate to that. Tell me, do each of these businesses fit into larger global verticals that you have? I mean, I saw your website, and it does seem to suggest that you have some existing auto businesses. You have, the metal side. Or is there anything in India that you're starting from afresh? Businesses that you're getting into that you've never been in before?
No, I would not say so far, at least, there are any businesses which we've not been in before. Auto, for example, we're the largest component producer in the UK. So it's very much aligned to that. It probably, in the matter of time, it probably will actually be combined with that. To begin with, it's a separate standalone vertical, but there is every possibility those two will be combined. Similarly, steel, we have steel operations. Obviously, we are significant amongst the largest producer of steel in Australia, UK, US, and now here. So all of these are global strategies.
Okay, let me talk a little bit specific now. So Amtech is done, Adhunik is done. I'm not asking for specifics, but you intend to run these businesses, right? I mean, these are businesses which you're going to now invest in. You're going to bring in local managements to run them. How is that going to play out?
There are certainly businesses which we are looking to run and grow. We have not in history ever so far disposed of a business or sold a business or closed a business. So there are businesses which add to our portfolio, add to our strategy, and we will look to grow them. And we will look to have businesses across our entire spectrum. I talked about our industrial spectrum, or the Liberty vertical, but we also have our resources business, which is energy, infrastructure, mining, and so on. We also have a financial services business, which is largely banking, but also insurance and fintech platforms. We also have our real estate business. So all these businesses which exist in other parts of the world or other hubs, we will look to develop in India as well. And in terms of management, in general, as a global philosophy, we always look for local management. And of course, in India, there is no dearth of good management. So largely will be Indian management.
Okay, but there's no one platform, a Liberty House platform, India, which was going to manage each of these diverse assets.
No, we have a devolved business model. So the steel group will have its own executive. Let's say the auto business will also have its own executive. Across it all will sit a country team, which is basically more for governance and compliance and reporting, but not day-to-day management. We have a devolved business model, so the executive sits in the business, not above the business, and financial resources are segregated, and each business has its own domain to work in.
But what is there a number in mind as to what would be the investment commitment for India as a whole at your end?
See, that is not a static number. It depends on the opportunities, depends on what opportunities you're able to close or not. For as an example, if we are able to complete on Bhushan, that changes the number. But in general terms, our comfort zone in other hubs has been $5 to $10 billion as our target sort of space at which we feel we have a critical mass in the country.
$5 to $10 billion, that's a lot. How much have you committed already across the 2 assets that you won?
Not so much. Remember, Amtech has other associated or subsidiary or affiliated businesses like Castex and ARGL and Metalist, which are in the fray. So that bucket so far is just over $1 billion. And of course, Adhunik was not a big amount.
How important is Bhushan Power and Steel to you? Are you still, what is your understanding? Are you still in the running? Because media reports suggest that there have been other bidders who have bid higher.
So time will tell. This process has taken many twists and turns. Obviously we are still in the process. We are keen for sure. Obviously we've demonstrated that already. But time will tell. With or without that, we are committed to our India strategy.
Among the core steel companies that went up for insolvency, if this is part of your strategy, then would you have perhaps done better to bid for others as well, or do you think you have a fairly decent chance in winning Bhushan Power?
There are many other companies, maybe not the same size, which we are currently engaged in, and they are to follow in the in the other rounds which are coming now in the NCLT. So we will be bidding for several other companies. Look, there are 2 strategies to make in India in terms of steel. One is to have one single large assets, which would be something like Bhushan, or what we call a string of pearls. So there could be several good assets which you put together, perhaps in a better value proposition, tougher to manage, tougher to organize and grow, but perhaps a better value proposition. So we're basically trying from all angles to see how we can have a significant presence in India in all our sectors, including steel.
So you're suggesting that even in the second round of assets, which the RBI had sent into insolvency, there would be companies that you would be looking at bidding for?
Yes, absolutely.
Okay, would they be in the sectors that we've already discussed, auto components, steel, linked to those, or would there be other interesting industries you may be looking at?
In terms of NCLT, the opportunities in some of the other sectors are limited, but the sectors which we are interested in, which we're present in globally, as I was explaining, are on the industrial side are steel, aluminium, and auto, defense, aerospace, those sort of downstream engineering businesses. On the resources side are infrastructure, which ports and shipping and rail and so on, which may present some opportunities in due course in India. There is obviously power, which will definitely do something in India. Renewable power is a core sector for us globally. It's our fastest. That and our financial services sectors are our fastest growing sectors. So both of those will definitely look to do something in India.
Okay, Sanjeev, explain to me your interest in ABG shipyard. I know you briefly spoke about it in your first answer, because that shipyard business in India, the private shipyards, have had a really turbulent history. So it's interesting to me what you see there, where you think you can make a difference, turn around a business like ABG.
No, it's a good question. So not just in India, globally shipyards are in a tough position, and I don't see how that will change in the short to medium term, because there is an excess supply of vessels around the world, and the demand for that, demand-supply balance for that is unlikely to shift dramatically in the near future. So, which is why you see lack of interest in these assets. So we have looked at the asset from an alternative point of view. We looked at it as an asset perhaps to break ships rather than to make ships, and to set up what we call our green steel business, which is to look to recycle scrap generated from that to make new steel. There is, we believe, a growing market for mechanized, environmentally safe ways of breaking ships compared to how they're done currently.
Okay. A couple more questions, Sanjeev. One is a familiar one which you've answered, I know, across many interviews, but I'm going to, ask it again. Who are your investors? What is the kind of time frame that they're looking to invest for? How do we understand the interest, from the Liberty end in India, such a large interest at that?
So it's family-owned business. It's privately held so far. There are a few small pockets of listed businesses, but largely it's a family-owned business. So investors so far are the family themselves. India has always been of core interest. Obviously should be, given that we are of Indian origin. But it's been a tough place, continues to be a tough place to work in. We see it getting better. We see it getting much better. Despite the current turmoil, we see the future much brighter than many others see it. We are very, very positive about the current government and the initiatives they've taken to make changes. So hence, that plus the opportunities which IBC has presented has made it compelling for us to come to India. We are very keen across all our sectors to grow in this and make India amongst our biggest hubs in the planet.
Okay, so it won't be a case of, a 5-year, 10-year horizon, since you're saying the family is the investor. But, again, you're not going to flip these businesses, is essentially what I'm trying to get at.
So we are a family business, right? So we've never actually sold a business in our history. And that is the general outlook of family businesses. We're looking to grow and create wealth for the next generation and beyond that to the generation after, rather than having any short-term objectives.
Okay.
So we think of time in the context of generations, not in the context of years.
Okay. Tell me something. You said that India has been a tough place to do business. IBC may have changed some parts of that. But the value or the the haircuts that banks, etc., are taking, and hence the value that you can pick up in a business. Are you happy with the kind of haircuts that have come through? Is the pricing to your sort of satisfaction?
Yes, the prices of these assets, they're obviously fair because they go through a competitive process, and they go through whatever best value can be attained for them. And some assets, as everybody has seen, can get very high values in that sort of open valuation which goes through. So when you say, am I happy in the general context, do I think these assets are getting fair value? I think by definition they are, right? Because they're going through a market process. Are we happy with what we're paying for them? There is a limit to what we will pay. We have strategic interest in these assets, and we're willing to pay up especially to establish a broad spectrum of presence and a deep presence in India, but there will be a limit to how much we can pay for them. Sometimes they get overheated because of competition, so we have to be careful not to get carried away.
Okay, and how do you rate the bankruptcy processes themselves? I think they've gone through many iterations, continue to go through iterations. You have been involved in some of those iterations in the Bhushan Power case. How do you rate them as they stand now?
I think it depends where you're looking from. When you're stuck in the middle of a process and it's taking twists and turns, it can seem very frustrating and can seem unfair. It can seem overly bureaucratic, overly unclear. You can come up with 20 different criticisms. But if you step back and take a look at it, take a helicopter view, what is happening in India right now is, it's a sea change. It's a watershed moment right now. These things have never been done before, so it's natural that there will be teething trouble. And in some ways, even all the issues which come about are good, because that means they will eventually settle down with precedents, with clarity on what the rules of play are. And we are confident that this means that the future will be clearer and brighter.
But why haven't we seen, Sanjeev, large financial investors in the stressed asset space come in? I mean, we've heard a lot of people saying we are interested, but when it actually comes down to money on the table, we haven't seen the large funds really be able to do much.
I think it's a combination of many things, right? Number one, India, as I said, it remains a difficult place to enter, to do business. There is a lot of first mover advantage. Or let's say, if you're an incumbent, you have a lot of advantages compared to newcomers. So there is that fear or that resistance which you face when you're coming in, and still there is confusion. There's lack of clarity in processes, in legislation, in things like this. So those things play heavily, and of course, generally speaking, within the Indian context, the appetite of many players is diminished because there is a lot of, by the nature of things, there's a lot of distress and a lot of turnaround, a lot of issues which arise from the current processes, which eliminate a lot of the players.
Okay, as in part
and
of your
funds by themselves will never come in, right? They need, generally speaking, to have partners. Yeah.
Okay, so you, as your strategy globally, you don't look at doing stressed asset funds or platforms, because I know the banking sector is trying to set up one where they bring in investors. Would that at all be of interest to you?
If I'm honest, that is of interest to us because we are looking at all possibilities of how we will take our next steps in the evolution of our group. So while we have traditionally never taken on debt, we're prepared under the right circumstances to look at debt on specific assets now, which we were not prepared to do. We have previously only looked at structured debt or off-balance sheet debt or safe bets, let's say, in terms of debt. We're not prepared to take an overarching or a variable debt which has the risk of causing trouble in due course. So that is again something which, as the group grows, as the family grows, we're looking at very closely. We've started looking at the equity space. We've listed one business. We're looking at various other businesses, how they fit into the capital markets in all the jurisdictions we're present in. And one of the options, one of the alternatives, which you very correctly pointed out, is also that we launch platforms where instead of looking just at the public markets in terms of listing, but we actually look at funds which we co-invest in, or which we seed, or we look at doing other things in, where we could either have debt funds or equity funds. So that is something which is being examined very carefully.
Is that in active conversation?
But one thing is core within that is that our objective. Sorry?
Is that an active conversation or consideration, the fact that you would look at a platform, a fund of sorts?
And absolutely, it's being amongst the various capital structures or the capital growth opportunities we're looking at. That is something which we are very deeply examining at the moment. There's a core team at play examining that, discussing with investors how that would work. But the core part of that always will remain that our own investment strategy, at least, will always be for growth and for long-term holdings. We will not look at businesses just to turn them around and then sell them. Generally speaking, things change, of course, but still around that there can be opportunities for investors to come alongside with us, and they can then exit, but we will continue to probably have a core presence in our businesses.
All right, Sanjeev, thanks so much. That's been a great conversation. Appreciate you taking the time to speak to us.
Thank you.